Hello, what's up traders? It's Clarkson Trades, the hybrid trader. In today's video, I'm going to be talking about understanding currency pairs. So if you are new to my channel, I would like you to subscribe, comment and like this video. So in Forex, a currency pair represents the exchange rate between two currencies, and this is the foundation of trading Forex. The naming system of currency pairs in Forex originated from the International Organization of Standardization. They established a standardized system of naming currency codes, with each currency having three-letter code. For example, we have USD, which is the United States dollars. We have AUD, which is the Australian dollar. We have NZD, which is the New Zealand dollar. We have CAD, which is the Canadian dollar. So all these currencies have three-letter code that is called. We have Euro, which is the currency for all those countries in the Europe zone. There is an exception to this ISO code system, which is the Swiss francs, that is CHF. Now, the CHF is the currency pair for Switzerland, and the CHF is an abbreviation that comes from a Latin word Confederatio Helvetica. In English, it means the Convertic Confederation. This is a Latin name for the Swiss Confederation. So the CH in the CHF represents the Latin name, while the F stands for franc, which is the currency of the country. This unique naming conversion reflects Switzerland's multilingual heritage and its historical roots in the Latin language. Now, I think this is the only exception that you might see in naming currency pairs. The rest of the other currency pairs, as the name implies, that's how the currency implies. We have USD, United States dollar, New Zealand dollar, Mexican pesos, Canadian dollar, Hong Kong dollar, Japanese yen, and so on and so forth. Now, if you look at this three-letter word, the first two letters often represent the country, while the last letter represents the currency of that country. For example, we have CAD, which is CA stands for Canada or the Canadian, while the D stands for dollar. We have USD, which is United States dollar. We have HKD, which is Hong Kong dollar. We have NZD, which is New Zealand dollar. So often, the first two letters represent the country, while the last letter represents the currency of that particular country. Currency pair naming combines two currency. The first represents the base currency, and the second represents the code currency. So since Forex is the exchange between two currency, the buying and selling of two currencies simultaneously, so you likely find all currencies paired. The first is called the base currency, and the second is called the code currency. Now, these are things that as Forex traders you have to know them, though nobody is really going to ask you, but you have to know them because you might hear a term. Let's say, for example, you just got into trading and you don't have a basic knowledge on all these terms, and you hear something like we are buying this currency, the base currency, code currency. You might be confused, which is a very simple term. The base currency is simply the first currency, while the code currency is often the second currency. So the exchange rate of this pair is determined by the price of the base currency in respect to the code currency. For example, we have Euro 1.09458. This means that €1 is worth $1.09458. So what I'm basically saying is the price of a pair is how much the code currency it costs to buy 1 unit of the base currency. Now an example is seen on the screen. We have Euro USD equals to 1.35361, which means that €1 is equals to 1.35361. So if you take €1 and go to the United States to change it in a bank, they are going to give you 1.35361. You can round it up, right? So right now I want us to look at the different types of currency pairs. First, we have major currency pairs, then we have minor currency pairs, and lastly we have exotic currency pairs. Now let's start with major currency pairs. Major currency pairs are the pairs that are widely traded all over the world, and they are high liquid pairs. They have high volatility, high liquidity, high volume, and these are pairs that mostly have the United States dollar attached to it. Now there's one common thing among major pairs in the forex market. All of them have the United States dollars attached to it. So we need to understand that USD, which is the United States dollar, is the world reserve currency, and this is the currency that is used to trade international trade, and the United States is the world power. So most of these major currency pairs have the United States dollar quoted to it. For example, we have Euro USD, we have GBP USD, which is a Great British Pound against the United States dollars. We have USD JPY, which is United States dollar against Japanese yen. We have USD CHF, which is the United States dollars against Swiss franc. We have USD CAD, which is United States dollar against Canadian dollar. We have AUD USD, Australian dollar against United States dollar, and we have New Zealand dollar against United States dollar. Now these are the major currency pairs in the forex market, and as a beginner, if you're asking yourself that which pair should I trade, because you must not necessarily trade all the pairs for you to make money. You can just decide to focus on 1, 2, or 3 pairs as a beginner and focus on the price action until you master that particular currency pairs. So the best currency pair to trade as a beginner is the major currency pairs. So the second type of currency pair are the minor currency pairs, which are cross pairs. Like you have the Euro, Great British Pound, we have GBP JPY, we have Euro JPY, AUD JPY, GBP CAD, New Zealand dollar JPY. These are cross pairs that they don't have the United States dollar attached to it. Now these are minor pairs, and mind you, they are also volatile, right? They are also volatile, so you can decide to trade either the major pairs or the minor pairs, but as a beginner, it's always advised you choose from one or two of the major pairs and focus on it. The last currency pair is the exotic pair. Now these exotic pair are often currencies that involve emerging economy. For example, we have the United States dollar against the South African rand. We have USD against the Turkish lira. We have United States dollar against Singapore dollar. Now these are still emerging economies. So most of all of these exotic pairs are pairs from economies that are still growing, emerging economies, and they are likely not focused on. Traders don't focus on these pairs. Traders barely trade these pairs in the market. The main pairs that are widely traded are the major currency pairs that have the United States dollar, and also the minor pairs because they are also volatile. So as a beginner, if you are asking which pair should I trade, then I'll recommend you go for the major pairs like GBP USD, like Euro USD, like USD CAD, USD JPY. These are major pairs that are very volatile, so you can choose from those pairs and focus on the pair to master the price action of that particular currency. So understanding which pair to trade and which time to trade these pairs are very important, because there are some pairs that have Great British Pound quoted to another currency. For example, we have GBP USD. So you need to know that a pair that has GBP should be traded during London session, and pairs that have United States dollar should be traded during United States session, which is a New York session. So understanding currency pairs and market session, of which I've done a video, you can check, helps you to make informed decision on which currency pair to trade and when to trade that particular currency pair. It also helps you to plan your trading schedule on when to trade. So if you have not watched my previous video, you might as well go and check on the video about Forex market as. So this is the end of this video. Thank you for watching. Don't forget to follow me, subscribe to my channel, like and comment. See you in the next video. Thank you.